This week is inflation week. With the United States, we have core and base inflation both out for the United States dollar this week. Looking at the metrics rising ever so slightly across the board, which is probably going to cause somewhat carnage to Good afternoon, ladies and gents, and welcome one and all to the Markets Now session today with the market report and weekly breakdown. Hope everybody's doing well. Good to see you guys inside the room as well. Yeah, welcome aboard. Good afternoon, team. Good to see you. And good afternoon to everybody on YouTube as well, who will be catching up on this in no time at all. So today we are going to be breaking down the market report, as I mentioned, to everybody inside the trading community due to a hospital appointment. I will be cutting it off at the end of the report overview today. Hopefully I'll be able to get out a US stock market trading opportunity for you all this afternoon, but please be aware I will not be taking the trade live myself, and so it will be purely for analytical purposes for you guys to use as you see fit. That being said, let's get stuck into it. So today, not just simply today, this week is inflation week. With the United States, we have core and base inflation both out for the United States dollar this week. Looking at the metrics rising ever so slightly across the board, which is probably going to cause somewhat carnage to our US indices and the DXY for that matter as well, but we'll be covering that in a little bit more depth in a moment. So looking at this week's market report, then we'll start from the top. Obviously I'm not going to copy it word for word. The market report is available for everybody to go in and download at your own leisure. That's inside the trading community there. I have sent out the general announcement of that, so if you are a member of our trading community, be it free or paid, you will gain access to that market report. Please feel free to head over to the My Report channel and download your copy so you can have a good dig into what's going on this week for yourself whenever you can. So last week, it was a bit of a rocky show for us last week, probably one of the slowest weeks we've actually seen, but I would still like to reiterate the fact that we did end up with a 1.13% realized net return. That's pretty good, but it was a big, heavy day of losses on the Thursday. We did actually have a little bit of a dwindling week. Monday through Tuesday and Wednesday, we had deteriorating days of gains, so we had a 0.55% day on Monday. Tuesday was like a 0.5 or a 0.51. Wednesday, we just literally got the break-even point. And then Thursday, we incurred 7 losses in a row, leading to minus 1.5% and bringing our realized growth target down into the drawdown of 1.5. Or actually, more technically speaking, it was like 1.1378 or something like that. But yeah, we were in drawdown period. And then Friday, thank God, we had a USD yen closeout in the morning that was actually triggered on the Thursday evening. And we had a profitable trade in, I believe, the NAS 100, which brought us back above the board at 1.13% net return to end the week. So it was pretty decent. And I would just also like to reiterate the fact that we had 7 losers in a row and we only lost 1.5%. I just, that's exactly why we do what we do. It works very, very well. We are so defensive that even when we go on a massive offense in the markets, we are never going to be that exposed. And we're still raking in month-on-month gains, week-on-week gains most of the time as a result of it, because of the way our risk reward and risk control works. So it's really, really good. It's very positive stuff. So next up then, moving down into the portfolio metrics, we are currently at 105.63% gain this year. Good afternoon to the rest of you who are dropping in as well. I can see your messages there. Hey guys. Which is absolutely incredible. Hoping this continues on its current trajectory. There's no reason why it shouldn't, and hopefully we're going to see a really nice second half of 2025. Monthlies 15.5% on average, with a 3.5% weekly figure. Now those have dropped down. The weekly especially has dropped down, maybe from like 3. I can't remember actually off the top of my head what it was right now. But we have taken a hit of around 0.3, 0.4%. That's basically as a result of just not doing anything last week. The risk reward did relatively stay the same. In terms of August trading data so far, we are significantly more short than long in the markets at the moment in terms of market exposure, which is interesting, following the trend of July there as well. So it'd be interesting to see how that one pans out. But I think we only had about 6 longs versus 11 shorts in the first week of August. So yeah, as I said, it'll be interesting to see how that one continues throughout the remainder of August. Looking at the portfolio comparison down here as well, the S&P 500 last week had a really explosive week. It was very, very good, closing out at plus 2.97%. UK FTSE actually took a hit at minus 1.27, and we were right down there as well with a plus 1.13, so relatively stable in comparison. So as we move into the market trends and opportunities, I have had to increase the size of the cells actually for each of these, because there's just too much analysis to start putting in, and ended up going below the bottom of each cell. So again, I'm not gonna sort of read these out word for word. It has been very well thought out and put together for you guys, so you can get in there and get stuck into that and have a good read through. Ultimately though, from the technical perspective, we've got some interesting things going on here at the moment. So we've got the US 30 Dow Jones, which is at a key point of liquidity here, and I'm looking for the potential for a breakout of that liquidity coming up to the all-time highs. Now, it is worth mentioning here that many of the US indices at the moment are all trading at all-time highs. They're all forming new all-time highs, but the US 30 Dow Jones, primarily because of its nature being an industrial index, it is dragging behind technology at this stage. And also obviously the S&P 500 has been very buoyant as a result of tech, but tech is staggering, team, and I feel that the industrial index is going to have its time in the limelight this week with that potential breakthrough. I'm not saying it's going to breach the all-time highs, but I do think based on the fundamentals and the technicals, that sweet spot that we're looking for, it could see the all-time high. So that's what I'm expecting this week for us. Now moving over to the Forex market, looking at the pound CAD again. I think we did a pound CAD trade last week, which was relatively decent in terms of its bias. We saw some really decent volume trading the pound CAD, and this week does look to sort of continue that theme. We've got a nice breakout liquidity in here at the moment. I am looking for the retest of this level. It is significant enough to warrant that necessary respect from us. So looking for that retest and then the continuation. For everybody who was here last week, catching the access point and entries workshop, you'll be well up to the mark and fresh off the bat for the break close retest continuation methodology on that one. But that's what I would be looking at for this one. We do have UK unemployment and GDP out this week, which I've indicated here will likely dictate the short-term moves on that. Moving down then into the weekly energy markets, we've got UK Brent down here in the corner. We've been ranging now, relatively tight range inside liquidity on the intraday sort of scope, if you like. For a while, we've spent about 3 or 4 trading days inside the point of liquidity. It's definitely not come without its chop. It has been up and down, but it's just not really breaking free of it. This week, I am expecting the continued geopolitical situation to loosen off any potential demand vacuum that we have UK Brent at the moment. Look at the potential breakthrough of this structural point and the push back down into this sort of more major area of liquidity. I wouldn't say it's the prime. It's not the single-handed major because that's all the way down here. But if we go back in time, obviously this goes off the chart here. But if you look back in time, this is quite a significant level. And it is a level where the markets had nice rebound before. So I would be expecting the Brent price to come down to this area and then possibly come back to retest that level that it's just broken through, which means we may be able to double up on this margin here, maybe able to get the short, get down to that low, buy back, long, back to the top, and then we can take it from there. You know, obviously if we get the breakout, we can take the long above, or we could possibly even look at a continued short if we look at the breakdown down here. So there we go. And then finally moving on to the metal markets, you got silver. Silver at the moment has been range bound on the daily time frame. Do expect that to continue this week. We've got a nice bearish bar starting at liquidity above price at the moment. Wait for that required breaker structure, which is probably going to be just below where it is trading at the moment. And then maybe we can get that nice push down into the anchor point there, followed up by the trend continuation. Make no mistake, this is a long green and strong trading asset at the moment. Higher highs, high lows being formed for many, many weeks. It's doing incredibly well, and I think that will continue. But I do believe that we're going to take a little bit of a rest first before continuing on. And I've listed out my exact analysis on that just below. So please, again, feel free to go and check that one out. Now, let's move down into market challenges this week, team. We've got a number of challenges to the proposed trading opportunities for this week's market report. We have got UK unemployment, US core inflation, US base inflation, UK GDP, and US PPI. Now, I'm not saying that UK unemployment and the UK GDP are necessarily going to be whopping events by any stretch. Just a little bit of a sneak preview here in the economic impact scale. UK data did not even make it, right? It didn't even show up on the impact scale this week in terms of the algorithm and how that churns the impact out. So I don't think they're going to necessarily be market moving events to such a grand scale, but in terms of what's going on in terms of the market challenges and how this particular one reads information from our proposed ideas, I would say that yes, probably going to be, as I did actually mention it in the GC breakdown as well. This week's UK unemployment and GDP data will likely dictate the short-term moves, and that's predominantly what this is telling us. Now, I am obviously this is the time where I'm actually going to flick back to the charts for you guys. So bear with me to Mo's. Just going to flick over to. There we go. Right, so based on this week's inflation data, I just wanted to dig into this a little bit more with you guys. We are looking at sort of 0.1% increases across the board aside from the base inflation month over month data, which is actually looking at a 0.1% decline. I don't care about that personally, and I don't believe that you guys should either. In comparison, when you're looking to the annual rate being a 0.1% increase on the core and the base. Both core and base annual rates, both 0.1% increases in the US. This is a problem which is not going away. We've got an incredible amount of pressure on the Fed at the moment from the White House. That is a very, very turbulent relationship that is there at the moment. Rates, Trump wants rates lower. Powell doesn't want rates lower, and rightly so. The guy definitely knows a thing or two about what he's doing. So, and looking at these numbers at the moment, I know these are only analyst expectations, but if we do seriously see increase in annual rates in the core and base inflation rate this week, we're really not going in the direction that we need to be going. We have a 2% inflationary target. Okay, we are 1% above on almost both of them. 2.8% if that's correct this week. That's going to be a 0.8% over, and we've got a 1% over on the core inflation. We need to get those things down. We have to get this down. The tariff situation as well. All that does is ramp up inflation. That's all that does. And we haven't even seen the fallout from this yet. This will continue now for months to years down the line. So what's that going to do? That's going to put an incredible amount of strain on the low to middle class in the United States. This is going to be fueling the pockets of the ultra rich, and it's going to be a complete, again, sort of transfer of wealth that we're looking at here. And why is this happening? Because of course we have Trump in the middle of it all, who is raking in millions and millions per day by having one of the most profitable business, running one of the most profitable businesses on planet Earth, and that is the nation, the White House. So it's a crazy time out there in the US at the moment. Really going to be, we've got to keep our ears to the ground now, more than ever, I think, with the US and the situation that unfolds with that one. Also, what that looks like in terms of the rest of the world and how it's going to bleed out to the rest of us as well. Because things here in Old Blighty, they ain't no good either. So we've got a lot of work to do with keeping the plate spinning and and trying to articulate the information as best as possible, as easily as we can. Obviously, you guys have got me, and I'm going to do my best to keep that coming. But things are going to get pretty spicy. They really are. So that's basically that. In terms of the other stuff going on with the rest of the week, as I said, the UK data unemployment rate and Thursday's GDP down here, they are listed, but I would not be expecting anything for you guys to have to worry about. Both of the events take place at 7 a.m. in the morning. That's before our primary trading session. We really don't need to worry about it too much. And then we've also got US PPI. That's 1:30 on Thursday, August 14th, 1:30 GMT. That's going to probably be a little bit of an impact one. It's a 0.2% increase from a 0% prior figure. It's a bit of a leading indicator in terms of monthly inflation data there as well. So if we see an increase in that one and an increase prior in all the inflation data, it's gonna be painting a real clear picture. And we've got the DXY at the moment, which is down here, trading at 98.48. And this one at the moment is really struggling to get any kind of breakout going above this level. It is pinched at the moment between these 2 points of liquidity. If we have the rampant inflation news that comes out this week and it is correct, I'm not actually entirely sure the dollar is going to react positively to it. I definitely don't think the stocks will. So I think we're going to probably be due quite a sell-off in the stocks sort of by, when was that data? Is it Tuesday or Wednesday? Tuesday. So you might get quite a significant sell-off on Tuesday afternoon with the stocks. But you will also possibly see a bit of a drawdown in the DXY as well. You might see DXY trading down at around maybe 97, something like that. And it's important to note that as well, because that goes completely against the historical trading patterns between inflation data and a country's currency. But there's so many other factors at play here at the moment that I think it's going to have an adverse effect and not necessarily a beneficial one. So we'll have to also, again, stay tuned, see how that one plays out as well. Right, back to the report then. I'm just going to flash back now. I wish this was a bit of a more streamlined transition, but there you go. Right, there we go. So back to the report then. So that's the market challenges. Now in terms of the SSV, we've got relative stability across the board. I would say that silver at 62.3% commercial longs is quite significant. It does kind of tie in really well, I suppose, with the bullish trend that we've seen at the moment. The only notable call out that I would honestly talk about today is the fact of the VIX. The VIX was on 20%, I believe, over the course of the last 2 to 3 weeks. That's doubled in 1 week. So on Friday, that was about 23. On Monday, it's 41.28%. So you're essentially measuring volatility here with this one versus the S&P 500. And we're looking at double the volatility. So it's not an exact science, but it's when you're looking at such a deviation from the trend in the previous 3 weeks, it's definitely something to note. So do be aware of that. We could be due some mega volatility. We could be due some, random strikeouts and stuff all over the place in the markets at the moment as a result of what's going on behind the scenes, not necessarily what you're looking at on an economic calendar. So just be aware. And that's a good segue into the third and final page of the economic or the market report this week, which is the Economic and Order Book Impact Report. Now, in terms of the impact scale at the top here, we do have 4 major events this week that have shown up. We've got the RBA interest rate decision, which is at 5:30 a.m. GMT on Tuesday morning, I want to say. We have the United States core inflation, United States base inflation, and the United States PPI month-over-month data. Now, the United States base inflation this time around is showing as the most prominent one based on previous trends in the data. This is registering as an 8 out of 10, so that is pretty bloody strong. We also have the United States core inflation registering as a 7 out of 10. So combined, it's going to be quite a spicy event tomorrow afternoon. I'm going to do my best to stream that live as well, so please stay tuned as I may be coming on a little bit earlier, maybe 1 o'clock. Maybe 1:15 GMT for those of you in the UK. For those of you around the other side of the world, 15 minutes to a half an hour earlier. Just show up half an hour earlier than you usually do, and just to be safe. And we're going to look to trade those live as well. And then as we move down here into what's going on this week in terms of the impact gauge, obviously the FX space has got 40% of the impact. Indices, equities 20%, commodities following up with 10%. There was hardly any movement at all in the buy side versus sell side interest in terms of the data sets this week. Hardly anything at all. So there's no point even covering that one and wasting time here with that. Equities and focus this week, we are looking at GigaCloud Technology, and GigaCloud has shown strong technical accumulation over the past couple of weeks. It's a really, really nice looking chart. You guys should check it out. I have actually taken the initiative to source it through retail avenues as well. So you will be able to have a stab at it if you wish. It is a really nice looking stock at the moment. Lots of things going for it, fundamentally and technically. FYI, go and check it out. The rest are up there as well, of course. You guys can check that out at your own, as you see fit, if it's something that interests you. And then finally, we've got institutional buying interest by sector down here in the bottom left. We've had just over $1 billion inflow in energy markets, 0.87 billion in industrials. We've had 0.79 bills in biotech, which is really interesting. That's actually coming out of nowhere here at the moment. And technology, which was actually semiconductors, which are being heavily used in artificial intelligence, has added another 0.64 bills in money inflow just this week, just over the weekend, ready for this week. So lots and lots of money flowing into these areas at the moment. I would say that the most interesting one to me is biotech. There's so many amazing equities in biotech at the moment. I'm putting together my own ETF, if you like, just of biotech equities. It's just amazing. There's loads and loads of really, really cool and interesting things in biotechnology at the moment, and what they're planning on doing over the course of the next 15 to 20 years. That I just think you can't not look at it. So that's a bit of a shout out there, a little bit of a minor shout out for myself to the biotech area. And that's pretty much it, team, for this week's market report. So, yeah, of course, if you've got any questions or any queries or anything at all that you want to jump into, please feel free to shout out in the general chat. And for those of you who are paying members and you're behind the scenes with me, please feel free to shout out in the general chat too, so everybody else who can download the market report can get stuck into that. If you don't, that's great. I've obviously done a pretty decent job at articulating the information, but remember that if you do have questions, I like questions. I like answering questions. So hit me up. That's good. Now, we are currently at 1:52, which by my recognition means we have 8 minutes for me to dig into a US index, I think, and be able to set you guys up with at least one trading asset for the afternoon session. So just bear with me. I'm just going to flash over to the charts again, and we'll get stuck into one of those before I head off. All right, here we go. Let's have a look. Back over here, we're going to line ourselves up with a quick scan. And so we've got US 30 Dow Jones, NAS 100, and the S&P. thinking about which is going to look best for split opportunities. I can't be honest. I think the S&P is actually taking it at the moment. Let's have a look here. So we've got that point there. And we've also got this area in here. I might have to increase the width on that point of liquidity there a little bit. So that's more reasonable about there, isn't it? All right, let's have a look at the 15. Okay, and so that's an incredibly wide trading margin. That's really good for us because now we can filter this down even further. So this area down here doesn't need to be manipulated whatsoever. That's really, really nice. I think we've got a decent ceiling above price action as well that we can utilize there. And that actually does encapsulate that high. Perfect. Now we've got a decent trading margin, at least between these 2 points in time. Break of structure for a potential short. I mean, you've got choices. You've got options here because of the fact that the margin is wide enough. I would say that if you want to take a long back above here, you'd be looking at this area for a TP, potentially. You'd be looking at this area down here for a break of structure area. So then the market would be ultimately dropping down, falling through here, back into liquidity, reaching the buy point, and then you'd be looking to buy it there and getting out here. Just as a potential option. Another option, of course, you hold the damn thing all the way up to 64.03. That's another option. If you want to short, I mean, frankly, yeah, I mean, that's a problem, isn't it? If you want to short it, I like the break of structure point here, but we're already trading below it. That's a problem. So we're not going to be able to trade the pre-market at this level at the moment. So we're going to have to wait for the market to come back up to the highs, hit liquidity, reject this yet again, and then you come down. And just like the long, you have options here. You could take the short from this area to this area, and that could be one of your opportunities. Or ultimately, you could take the short via the breaker structure in there, and you could have that all the way back down to big liquidity. But make no mistake, guys. Okay, make no mistake. That is an intraday trade. That is an intraday trade, and you are looking at this on a Monday, which means temperamental markets, lack of trading volume. Remember, think about it. Think about the markets like a steam train. Sometimes on the Monday, yes, we do get those explosive moves, but you have to look at the large sets of data. And the large historical evidence is Mondays are a poor trading day. They are not that good because there is a lack of momentum in the markets as the engines, the wheels are beginning to turn. Tuesday, Wednesday, Thursday, prime days. That's your good stuff. But the Mondays can be a bit temperamental. So just be aware. Just play it relatively safe. We've got all week long. Maybe if you have a 3 trade maximum limit on a regular, maybe bring that down to 2. So you're only risking 0.5% of your capital, and going from there. That would be my professional opinion about today's markets. And that, ladies and gentlemen, brings us to 1:57 almost GMT, which means it's my time to dash. I hope you've all had a wonderful session with me this afternoon and enjoyed it as much as I have. If you do have any questions, as I said, please feel free to drop them in the general chat and I will get back to you ASAP. For those of you out on YouTube and you're not a member yet for some crazy reason, please join for free. Download your copy of the market report. Come see what we're all about and come see what we do every single day and every single week. That would be great. And have a fantastic day. So good luck everyone with the market open this afternoon. Have a good trading session for me. I look forward to catching up with you later on this afternoon to see how it all went. And I also look forward to catching up with you guys tomorrow as well, where we can get stuck into building our order book. So take care, team. Good luck, trade safe, and I will see you then. Thanks a lot. Bye-bye.